Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, March 23rd, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I'm not a registered investment advisor. I cannot give you individual investment advice. This is for educational and entertainment purposes only. So with that, let's get started. So first slide here. So evidently, back in January, I was not aware of this. Somebody pointed this out to me about a month ago, but I haven't had time to get to it. So this week I thought I would talk about it. There's some NGO based in the UK with an office in DC called the Center for Countering Digital Hate. And they came up with this report about the top 100 people on YouTube that are the biggest climate deniers, that are profiting from climate denial. Their words, not mine. And I was named as one of those top 100, which I was actually shocked. Evidently, this outfit, if you read, I'll put a link to the report and you can check it out yourself, but evidently this is an NGO that, I don't know, ostensibly their goal here is to, they evidently use an AI, scoured all these videos, and the AI determined that I was a climate denier. So according to the Center for Countering Digital Hate, their mission is to remove people and information like that from the internet, which is oh so very democratic, right? And free speech. So anyway, what's interesting is I'm on there with such luminaries like Jordan Peterson, John Stossel, the former 2020 guy that debunks stuff, and Glenn Beck. If you go down the list, you'll be, I think Doomberg's on there. Anybody that does not buy into the man-made climate change hoax is on the list. Like I said, their goal is to get, in quotations, climate deniers deplatformed. I just want to clarify something for the AI and for the Center for Countering Digital Hate. The problem with this whole thing, and another problem of the West, is the intellectual dishonesty, and also the just twisting of words to mean things that they don't mean. And so one of the things that I find is important when I'm having a debate with someone or a discussion is that the words are defined properly. The problem is if you don't define words properly, if you don't have a consensus at least on what the meaning of the words that are being debated are, then you can't have a legitimate debate because one person's talking about X and the other person's talking about Y. And so we have these terms like climate denial. What does that really mean? Well, evidently, from what I read in the media, what I see other folks saying that are advocates of this is if you deny the consensus view that is out there, well, primarily in the West and among wine-soaked white liberal middle-aged women in the West, that the climate is changing, it's getting hotter, it's going to continue to get hotter until the earth is destroyed and we all die. That's being caused by industrial activity and CO2 production, which coincidentally seems to be rising along with the temperatures. If you deny that and aren't on board with that, and the fixes that go along with that, which seem to be centralized government, energy transition focusing on intermittent renewables, and basically, what we've talked about in the past, okay, which is more control, higher costs, less economic activity. If you're not on board with that, you're a climate denier. So let me go on the record First of all, the climate changes continuously. It has for billions of years, hundreds of millions of years. It will continue to change, irrespective of what humans do. There's a good video that dropped this week, and I will put a link to it. I forget the exact name. It's basically about the climate hoax. It has all these great scientists on there, many of which are Nobel Prize winners, and it talks about, what the real issue is. And so, what I've always said is, the climate can, I'll put that video up and you'll get it's another, if you already have a view on this, which most people do, you're probably not going to change your view irrespective of what information is given to you. So we're in this now political wrestling match where the people on the left, or the people that are, on the fainting couch about this issue, are going to try to deplatform, destroy, get rid of dissenting voices, which is oh so very Soviet of them. That's what totalitarians do. They don't want any dissent. They don't want any questioning of their agenda. And so they remove they try to get rid of that dissent or silence it or shut it down. Okay. That includes Nobel Prize winning physicists, geoscientists, what have you. Okay. And so this is an agenda. And so again, the climate changes. It will continue to change irrespective of what humans do. The question in my mind is, how much is human activity contributing and what can be reasonably done? Okay. And so I don't think that, unless you have a worldwide consensus, that's why they want centralized government, so they can have this consensus. But the problem is the global East and South is not going to go along with this. There was these people want to get wealthier. They want to have the lifestyle. I was listening to an African student the other day on a podcast, and he was talking to somebody. He said he was from, I forget, somewhere in Africa. I think it was maybe Kenya or something. And he said something that was very profound to me, and why this is never going to be dealt with worldwide. He said, we have extreme poverty in my country. We have extreme suffering. We have disease. We have lack of sanitation. We have lack of energy, resources. People burn dung and wood and charcoal and things like that for heating and cooking. He says, we have bigger problems than climate change. We have real problems. Clean water is a big problem, That's a problem that needs to get solved. We have malnutrition for children. That's a big problem. These concerns about climate change or what have you are not concerns for the majority of people around the world that are poor. And so that needs to be taken into consideration because, you can force feed this, I guess, in the West, which is, like I said, this is part of the decline, right, of the West. And so, what are you going to do about China and India? They're not going to comply with any of this. Okay. I've brought that up before. So nobody addresses these issues. And so I get down to this bottom line, and I kind of take this, what I've thought my whole life, what I was taught, you have choices in your life. And if you make choice A, if you're weighing choice A and B, you have to weigh the pros and cons. And no decision you make is perfect. There's always going to be cons to every decision. And so is the decision you're making or the choice you're making, do the pros outweigh the cons? Okay. And I think what's interesting to me is the lack of understanding of, this is kind of getting into math and science now, right? Which is not a strong suit of a lot of these folks that are pushing these agendas. Entropy, the tendency towards chaos, the second law of thermodynamics, energy and energy inputs into holding back entropy and reversing chaos. They don't seem to understand that. If you don't ever mow or trim anything in your backyard, it'll just become very chaotic back there. It'll become overgrown. It'll become chaotic, and it will require a tremendous amount of energy input by you with some clippers and a lawnmower, gasoline in the lawnmower, to reverse that chaos. Okay. That's kind of what we're talking about here. Right. So, I am a pro-human person. Human beings have thrived because of the energy abundance that we have had and the evolution of energy density over time, of going from less dense sources to more dense sources. The problem, I think, with a lot of these people that are pushing this agenda, well, there's all kinds of points. Some people are actually true believers. Some people are on a grift. That's their job. And like Chesterton said, or I think it was Chesterton, somebody said philosophically, it's hard to get a man to change his view when his job depends on him not changing his view. Some people just want political power, like the ketchup guy, Kerry. He just wants to be in the limelight. So this is another grift for him to be in power. And then, and then there's a certain amount you can attribute, I guess, if you're conspiracy minded, an evil component that, these governments, especially like in the EU, and I would say places like Canada with Mr. Trudeau, just want to centralize government more and more, and they want more power. They're just basically sociopaths. So there's all kinds of things involved here. It's not just cut and dried. And so I guess I'm glad for the press. I like to be, in the limelight. That gets me more attention. I guess I'm not sure if they're going to be able to deplatform Jordan Peterson and Glenn Beck and all these people. I may get deplatformed at some point. I don't know. They may, write to YouTube and say, I'm this horrible person that needs to be kicked off the site because I don't buy into the, the the hysteria of man-made climate change. It's not true. And and I'm profiting off that. I will tell you that I got my YouTube check for all the ads I got last month was $252. So I'm not getting wealthy off YouTube by talking about these things. I'm an advocate for human beings and human progress and humankind. And more energy is what lifts people out of poverty. What I find almost evil of these people is they're anti-human. They're the kind of people that go, remember when for example, I'll give you an example. I was in Mongolia, and at the time I was working for a major utility. I wasn't there for the utility. I was there for my own investment purposes. And a acquaintance said, hey, why don't you go meet with um, the undersecretary of energy here or something like that. You can get a meeting with them or whatever. I didn't have time to do it, but I did hear another story about what happened at this guy's office. So a Swedish NGO, in Mongolia, let me set the stage. Mongolia has tremendous coal reserves. When you go there in Ulaanbaatar, the Soviets built these huge thermal plants that create electricity, obviously, but also circulate hot water and steam throughout Ulaanbaatar because it's the coldest nation capital in the world. It gets well below zero for a long part of the winter there. And so they have these huge thermal plants that are designed to burn coal and create heat and allow these people to live. And so the Swedish NGO, I guess, came there and said, you really need to get off coal. Coal's bad and blah, 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 blah. Climate change, all the various buzzwords. And I guess the Minister of Energy basically told them, listen, you people in the West use coal to industrialize and advance yourselves. And now you're coming over here to a place where we fuel the entire economy by coal. We rely on it for our very survival in the winter. And you're telling us that we should just get off coal. And they politely asked the person, that was the end of the meeting, go away from here. So, my point is this, is that I think that I'm going to say what I need to say. Energy is the lifeblood of humankind. I mean, if you don't have the energy that we have now, the inputs going in to allow the society we have and allow the flourishing we have and the excess energy that we have for now, at least, that allows us to do other things except for scratch out a living out of the ground. I've talked about this before. There's a book out there that talks about energy return on energy invested, specifically around in the Middle Ages, before you had the steam engine. Okay. and before you had coal, and even before you had wood burning steam engines. And the energy return on energy invested was like 2 to 1. And so you were really dependent on the sun and the weather for your crops. And you need to have an abundance yield of crops to get you and your draft animals through the winter so that you could repeat the cycle, because the energy input from the sun was enough to basically scratch out a living. There wasn't any excess energy to do anything. That's why the Middle Ages were the Dark Ages, because you're basically trying to capture via crops and store enough crops, stored energy to make it through the winter so that you could eat calories, and so your animals would have enough fodder so that you could come to the next spring and repeat the process. There wasn't excess energy and for people to do anything except for that. There was no scientific endeavors. There were not a lot of advancements during that time, because the energy return on energy invested was 2 to 1. You're basically scratching out a subsistence lifestyle. That's what you see in many places around the world that don't have, uh, you know, high energy density inputs into their economies. You see subsistence farming, subsistence life, poverty, and all the things that go along with that. Well, I'm against that. And so I'm not, you know, I'm a conservationist. I don't believe, I told the story about when I was a kid and I was really young, and we had at the time lived in Buffalo, New York. You go over the Skyway Bridge, and I remember a company there along there. They had chemical companies and stuff, and you had National Aniline there, which was a dye maker, I think. And you would look down as you're going over the bridge out to Lake Erie. Basically, it was like an industrial smog there, I remember, and the smell was kind of putrid. And I also remember the river, and going out to Lake Erie, you could see like the purple discoloration. They were just dumping the stuff into Lake Erie. At one time, you couldn't even eat the fish out of Lake Erie. So yeah, we shouldn't do things like that. Okay, we shouldn't just dump things. I believe in conservation and good stewardship of resources. Okay, but I am not against the use of the resources. They need to be responsibly used and developed. They are there for our use. Okay, and I am not a hysteric like some of these people. And again, it goes back to I'll say it. I'm not ashamed to say it. My Orthodox Christianity and my belief in my beliefs. Okay, we are supposed to be stewards of these resources. They're for our use and for our benefit. Okay, and they need to be used responsibly. I'm not anti-human. I don't hate humans. And this idea, like the Swedish NGO that went into the Mongolians' office, we got ours. We're pulling up the ladder now. Everybody in the West is wealthy already, relatively. They have a good standard of living. So everybody's just supposed to now stop developing because a bunch of middle-aged, white, college-educated, unmarried, wine-soaked liberal women in the West have a hysteria around CO2, which is basically a life-giving gas. Okay, without CO2, all life on Earth dies. If CO2 levels have been way higher than they've been currently, and the Earth has flourished. CO2 is not the problem. The problem is hive mind, this turning of these things into a religion, because these people have no belief system. They have no philosophical anchor. Okay, so they create their own God, which is them, and this narcissism. I think it was Chesterton that said that those that believe in nothing will believe anything. And that's what this has turned into, and not only that, it's so big now, it's not going to go away. It's one of these things that it's gotten a critical mass, is going to go away. So it's going to be a continuing discussion going forward. I think that we're past peak ESG. I think because the internet, I mean, I always knew that with the internet, I've told this before, and I think if you think about it, it's true. Back in the day before you had the internet, you had a few newspapers, right? Everybody read. You had three basically main channels: CBS, CNN, NBC. Then CNN came along, and so the information was able to be, I don't want to say controlled, but it was controlled. Okay, you didn't get differing opinions. You didn't get the Overton window moving left or right too much, because it was kind of controlled. They all were singing from the same choir page. And so when the internet came along, I was so grateful for that because I knew that was going to blow things up, blow up that monopoly. And yes, do you have wacko ideas and conspiracy theorists and people that you kind of raise an eyebrow when you read their stuff or hear them on a podcast? You're like, okay, well, that's interesting. But you don't have to listen to them, and you can engage and debate them. And what it did was wake people up, I think. And you're not going to put that genie back in the bottle. They're trying to, but they're not going to be able to. So I guess I'm going to close this out. I was jumping around a little bit. But what I want to say is that uh, maybe they go after me. I don't know if they do or not. I don't know if who these people are. I have no idea. Don't really care. Um, if I am removed, I do have a channel on Rumble. So I'll just go into Rumble and Odyssey and stuff like that. So if I disappear, it's either because I died or because they killed my account. Same thing on Substack. I have my own website. If they kill my Substack, I'll just go back to my own website. So, you know, I'm going to keep saying what I think is the truth. I'm going to keep pointing out the hypocrisy and the idiocy of these people, because I do think it has investment implications. The underinvestment, and because of this ESG thing, is going to cause oil prices and energy prices to rise very high over the rest of this decade, and it's going to affect your life. And if it can affect it positively if you understand what's happening and why it happened, and then you can take advantage of it. Okay, because that's your obligation is to take care of yourself and your family and those around you, and then that circle expands as you desire it. So that's my mission here. And so just want to let everybody know, again, if I disappear, I'll pop up somewhere else. I'm like a mushroom. You can chop me off. I'll just pop up again in the next reign. All right, let's move on to the next slides. So this is from Game of Trades. Again, good X, follow them on X. Philly Fed, state coincident index, number of states showing increased activity. Well, we're below 50%. Only 20% of the states are showing increasing economic activity. So this is how it starts, right? These recessions. So I'm not saying, I've been talking about this. It's like you keep saying the same thing over and over. I'm starting to turn into a Peter Schiff guy but again, we just look at the nowcasting. Why is this important? Because you saw what Chairman Powell said this week, okay? Financial conditions are going to lessen. We're not in tightening. We're still, well, let me rephrase that. They want to cut rates so bad, you can tell, okay? They're talking about 3 rate cuts this year. They're talking about cutting the QT in half. That is bullish because that's less tightening. And financial conditions are the loosest they've been since the beginning of this so-called tightening cycle. That's amazing because of all of the facilities that the Fed and the Treasury are using to inject liquidity into the markets. And now you're talking about lowering rates, okay? And you're talking about curtailing QT, okay? That's bullish. That's why everything went nuts this week. That's why commodities on the verge of breaking out. That's why copper's over 4. That's why gold's making new highs. That's why Bitcoin's making new highs, okay? And so you put that in the context of what I've talked about before. And so now this is the kind of stuff that's going to lead, in my view, as we start entering a recession. It's going to give the air cover to them to lower rates. It does not appear they're going to be able to get the inflation rate down to the target. It looks like they're setting the stage with the discussions. You can see it starting to happen, right? It's not just one statement. It's over a period of time. Well, we don't necessarily need to get to the 2%. We can live with 3. Maybe we can live with 4, okay? Because they have no choice. They've got to get in there and start buying these treasuries because the debt's just increasing, astronomically. And if they don't start getting into a rate cutting cycle, the ability to, you know, get this debt finance is going to be the interest costs are just they're going straight up. We're over $1 trillion in interest a year. So I think there's a lot of things at play, but it all leads to, again, all roads lead to more liquidity. And we've talked about this before. The rest of the world's already ahead of the Fed and the ECB and the rate cutting cycle. They're going to come along, and like we said, both of them are going to be cutting rates this year, and the whole world will then be in a synchronized upward liquidity cycle. So, could we see new all-time highs in the stock market? Absolutely. I mean, this is shocking to me what they're getting ready to do. But again, it doesn't matter what I think or you think they should do, or what we think their actions are right or wrong. We need to understand what the actions are going to be. The only reason we talk about Chairman Powell and the Fed and these things is because, again, they have that bazooka, that liquidity bazooka. Okay. And it seemed like they were putting it back into the arms locker. Now they're pulling it back out and polishing it, possibly getting ready to fire it. So this is the kind of data I think that will give them the air cover they need to do it. And it looks like, we're at levels here again. If you look back in the past, where this state coincidence incident index is at levels that have indicated recession in the past. So anyway, just wanted to point that out. So I thought this was a really good chart that I saw this week, so I wanted to pull it up, and I want to talk about it. Back in February in the Actionable Intelligence Alert newsletter, I talked about the Cantillon effect, right? And what that really means. And basically, it goes back to a French economist that wrote about this back in the 1700s. And basically, the one couple sentence thesis is, the closer you are to the creation of the money, or back in Cantillon's time, as closer you were to the king, the closer you were to the issuance of money, the better off you would be able to be, because you have first dibs on any inflationary impulse or liquidity impulse. And so this oh no, this doesn't show it. Wait, I'm ahead of myself. Let me just talk about this real quick. Let me go to that chart because I'm already on it. Yeah, here it is. So here you have what I'm talking about, the Cantillon effect. The closer you are to the cash, basically, the better off you're going to do. So let me talk about that in the context of this chart. So look down here at the bottom. This is the total net worth held by the bottom 50% of people in the US. You see that it's not really done that well. Then you see the red line, which is the net worth held by the top 0.1%. Then you see M2, money creation. Okay, do you understand how this works now? If you are interested, you can read the February issue. You'd have to be a subscriber, but this is the Cantillon effect. When the Fed when central banks, let's talk about the Fed, when they get into a liquidity cycle, those that are closest to the money benefit. And these people at the bottom, they're not close to the money. They don't own any assets. They're not able to take part in the asset inflation that happens during these liquidity cycles. What they end up seeing is, when the inflation and the increase in money supply causes increased prices, that's what they get to see. Basically, a 20% increase in permanent prices, which we experienced over the last 2 years. Okay. But people that have been holding assets are doing just fine. So how does this work? It's very simple, right? When the Fed wants to increase liquidity, what do? Okay, they lower rates. So what does that mean? Well, what does that mean, John? They have to go in and buy government securities, right? That makes the price of the bond go up and the rates go down, and they buy and sell to keep it at some level. Okay, well, who are they buying it from? They're buying it from individual investors, institutions, money market funds, whoever, pension funds, whoever. And so when these people sell their bond securities to the Fed, they get cash back. Well, they don't just put the cash in a mattress. They start looking around. They don't sell their bonds unless they have a investment that they think is going to return higher than the risk-free rate. And so what they do is they take the $1 million they got and they say, okay, well, I'm going to invest it in this rental property, or in this business venture, or in this stock market. Okay. And that's when asset prices start going up. I mean, this is very generalized. And so this is how it works, guys. People that are, as liquidity increases, who has the most potential to have margin loans and have access to credit facilities? The wealthy and the super wealthy. And so they continue to get richer, And the bottom 50% who own nothing, they're basically living hand to mouth, working people. I'm not degrading them. I'm not saying anything bad about them. I was one, but you have to understand what's happening. You have to understand what the real problem is. Okay. And you have to understand that this has to be stopped. This has to end. This is the system. This control of the money is the problem. Okay, that's a big contributor to the wealth inequality in this country and in the world. Okay, and it's a rigged system against you. Okay, and so that's why I've said before, you have to get a grub stake put together. You have to be in the game. Okay, but you can't just sit here and be a wage slave. Okay, you are going to continue to fall behind. They're telling you right now, okay, Fed, that you're not going to hit the 2% target. Forget about 2%. Why is price increases of 2% every year a good thing for an average wage holder? It's not, or wage earner. It's not. Okay. In a technologically advancing society with real money, you should have slight disinflationary impulses over time so that your wages, the currency that you're using for trade and that you're saving in, should appreciate over time. And so your labor that you're storing, it, you have to store it in something. You're not like a squirrel that accumulates nuts, but you have a savings or whatever savings account you're getting stolen by 2, 3, 4% a year. And you don't get that back. There's no disinflation going on. So when they say, well, we've got the inflation rate down from 9 to 3%, aren't we heroes? All you've done is decrease the inflation rate. And so why don't you go into a compounding calculator? They're all free on the internet, and put 3% in and compound that over 20 years and see how much purchasing power you lose. This is why you got to be in the game. This is the game right now. Do I see it changing? Not in the near term. And so we're in another liquidity cycle. We're entering another liquidity cycle. They're telling you they're going to cut rates. They're telling you they're going to cut QT in half and eventually end it. Okay. And so, you could see asset inflation. You could see what's going to happen. This is why I'm so bullish on resources, because of the underinvestment now going to be coupled with the rocket fuel of the liquidity that the world is generating, all these central banks. Okay. And so this is the game right here. This is it. This explains most of it right here. Most people are here. They don't have, I hate to say it, they don't have a pot, to what in. So in the meantime, you can see over time, as they create more liquidity, who benefits? Well, the wealthy. And so you need to understand the game. Doesn't mean you need to like the game. It doesn't mean you have to agree with it. There's nothing you can do with, there's nothing I can do about it, but some rinky dink, video podcast guy with 11,000 subscribers on YouTube. I might as well go out and yell at the moon. But what you can do is say, I understand what's happening. I may not like it, but this is the game that I have to play in. These are the rules. And so I need to do this, this, and this to make sure that I have the funds for my kids' college, that I have a retirement fund. Because if you're relying on Social Security, you are going to be shining people's shoes. It's not going to be there, or it's going to be inflated away and degraded over time. So this is my whole point right here around, what I talk about, what I have been talking about. So for many years, that this really illustrates it perfectly in my mind. Now, it's not a perfect, there's going to be some guy that comes into the comments, well, it's not exactly like that. The Fed doesn't really do it like that. The banking system I know all that. I'm telling you that the Cantillon effect explains a lot of this. And if you understand that, again, the Cantillon effect, what are we talking about? Well, if look at the Mississippi River. The Mississippi River, for the most part, starts in the headwaters up in Minnesota. Okay, and then you have all these feeder rivers and everything that enter it. The Red River, Ohio River, I think, all these rivers end up dumping into the Mississippi, right? And so if I increase if I double the amount of water, triple or quadruple the amount of water, uh, and this is an analogy about liquidity. Let's say liquidity is doubling the water in the headwaters in Minnesota. I mean, down in Memphis that particular day, they're not going to see any effect to it. And so as that water starts making its way down the river or through the economy, the analogy, I stay with me on this, then it's going to have these unknown effects. When it gets to a certain place in Iowa, for example, where they built levees, now the levees get overflowed because they weren't ready for that amount of liquidity. That could be, a particular asset class that goes booms because of this excess liquidity. This is the analogy, okay, that we use. And so as that liquidity moves through the economy, moves through the financial system, you're not going to be able to directly predict where it's going to cause booms, where it's going to cause inflations, okay? And so you have to be open-minded to that and be thinking about that. But this does explain a lot. And like I said, the people that are closest to the printing press in our system are the ones that benefit. So I don't want to keep going on. I just thought this was really a great example. I talk about this more and give links to various articles and papers about the Cantillon effect in the February issue of the Actionable Intelligence Alert newsletter. Feel free to subscribe if you want to read that. So going back to this, again, we have average hourly earnings of production and non-supervisory employees is in the red. And then you have this, personal interest payments are, rocketing above basically earnings is what this is showing. So this is what I've been talking about. And this is why we're seeing higher credit card delinquencies. People are trying to maintain, because of the inflation, they're trying to maintain their living standard by whipping out credit cards or whatever and trying to make ends meet. So this is not a positive development in my view. I just wanted to point this out. Game of Trades again, excellent charts, excellent account to follow. World debt in trillions. Look at this, folks. This is world debt. I mean, okay, it was on the upswing up until like 97, and then this thing has went like at a 45-degree angle. I mean, are we getting near the end of this debt cycle now? I mean, how much higher can this go? I mean, it's something, again, it doesn't matter today. It doesn't matter for the trading day on Monday necessarily, but at some point, this will matter, and then it will be the most important thing that matters. So I want to talk about this. Been pointing this out. There's a lot of people picking up coins in front of a steamroller with this overvalued market. But again, you have to ask yourself the question: if the liquidity is going to start coming back into the market, I mean, the Federal Reserve's talking about cutting rates when the market's at all-time highs, when housing's still very expensive, when some of these bubbles haven't been popped yet or been deflated. I mean, this is really crazy. And so, you have to ask yourself, I mean, this can get pretty wild. I mean, at this point in time, I've basically thrown my hands up. I mean, it's impossible. It's very difficult to forecast. That's why I'm trying to just stick to this liquidity and to the fundamentals and hoping that the fundamentals over time assert themselves. Fundamentals, what I'm talking about is like the underinvestment in resources. Okay. And then, if they're going to go nuts with this liquidity, that's really one of the only places that's really undervalued still. And that's why I think you've seen all of these things start to break out. Like I mentioned earlier, copper, gold, Bitcoin, these are all being influenced by liquidity. You've seen oil prices up about, Brent's up around 84, 85. And now we're getting ready to go into the summer driving season. And people are, has potential to get kind of ugly. And there's no reason to say that, these companies like NVIDIA, they couldn't keep going up. When you're in this liquidity and this bubble-licious mentality, momentum feeds on momentum. So what's this chart shows? It shows the market concentration of top 10% largest stocks, top 10% of stocks by size versus the entire stock market. You can see that we're at, again, we're at periods that when you had the Great Depression, 1929 crash, the 2000 technology bubble, and now mega cap stocks. I mean, uh, something's going to break. I don't know what's going to happen. I don't want to stand in front of that steamroller. I think there's other places to put money that are cheaper, that are undervalued. I can't make myself do it. If you're doing it and you're making money, then I hope that, you're being prudent and taking some off the table. I was going to put it on here, but I didn't. I did see a thing about this trader. He basically was a swing trader, and in about a 3-year period, he turned 35,000 into $10 million, and then he lost it all. And I listened to his thing. I didn't really want to put it up because it was a little, I don't know, it was a little whiny, I guess. So, but I thought it was interesting that a guy was able to take 35,000, turn it into 10 million, and then lose it all. And then he also obviously got divorced on account of it, and a whole bunch of stuff happened. So, you know, if you got good profits, don't, you know, and you're in your brokerage account and it keeps going up remember, you don't have the money until you sell the securities. Okay. You don't have the profit till you take the profit. So, not telling people what to do. I don't know. I have no idea what's going to happen. I am very shocked at how things are. But again, then you have, Mr. Powell talking about getting looser with monetary policy at these levels. It's mind-boggling. So, anyways, these things do exist, and we do have historical markers in the past which were not good. So beware. Again, here's the Barron's Gold Mining Index to gold ratio. You're at a level that we haven't seen since 1940. We're below that level, and so this is what's cheap: gold mining stocks. I hate to say it, and everybody's going, "What are you talking about, John? You're crazy. These things are dead. They're roadkill. No one cares." And that's where I like to play. We have the gold price. One of two things is going to go up, happen here, I think. With the gold price breaking out and moving higher, making all-time highs, the gold stocks are either going to go up and reflect that reality, or the gold price is way ahead of itself and it's going to come crashing down. So, obviously, I'm not a fortune teller, but I think that with the liquidity that we're seeing, with the debt that we have, with all roads leading to inflation, I don't know. I just think that hard assets, things that can't be printed up or created out of thin air, are going to do very well. That's why art is performing well. I do have some investments like in wine, vintage wines. They've started to turn around now. Obviously the gold price making new highs. You've seen what Bitcoin has done. You're seeing now, like I said, copper moving up, the oil price. So things that, these central banks can create as much paper currency units as possible as they want, but they can't create more of these assets. And so I think, I don't know how this ends up, and then you throw on top of that the fact that we're in the age of chaos, and we're in this cold World War III, my theory. I mean, that's all inflationary. That's all not, I just think it's a good setup for hard assets over the next 3 to 5 years minimum, and into 10 years. That's why I like offshore, because nobody's building any more offshore service vessels or rigs, but yet the demand continues to go up. Okay, so the rates are going up, the cash flows are going up. I mean, that's how my mind works. And now we're seeing some of the smart money move in. This is what you would see, right? Typically, in an emerging bull market and something. Originally you have, it's dead, it's left for dead. Everybody hates it. No one talks about it. No one cares. You see things like this. Then you see like Elliott and Druckenmiller moving into the large cap stocks. You'll see the large cap stocks move first. They'll start to get some momentum, and then over time, then the animal spirits start waking up. The green shoots start coming, and then you see people moving into the juniors, and that's when you get the bull market, the really acknowledged bull market. So it takes time. It's kind of like a, just born baby now in a life cycle. And so this thing has, I think, a long way to go. And I think that it's prudent to at least keep an eye on it, because I think, as I've said before in an interview, and I've also said, I think in the last few weeks, the, the gold bull market and the gold stocks, if we do get one, it can be as bullish as the what happened in the uranium stocks. And I think we may be at that juncture. Again, we have a great setup for commodities. Breadth is increasing. Okay, 200-day moving average and breadth is moving up. I'm very bullish on resources with what's going on in the world currently, monetary policy in the world, the condition of the world. It's, the lack of investment is really, I think, not been taken into consideration. Here's Tavi Costa. The copper to S&P 500 ratio undeniably stands out as one of the most intriguing potential double bottoms in markets today. While the green revolution and electrification efforts are set to provide a significant boost in demand for the metal. Anyways, you have to be careful because you can always find some type of, well, you scratch your head and go, okay, copper to S&P 500. Why do I care? Is this just, seeking out, these, wild, you know, ratios to make a point? I think what the point is that copper is undervalued to stocks. This is the point that I'm trying to make here, and then when you're at this, we've seen this happen before. And we see now that, what's happening. I wouldn't necessarily have put G7 manufacturing revamp here. What I would say is the emergence of the 3.5 billion people between Istanbul and Jakarta, the rise of the global East and South as they enter their S curve, as they enter the middle class, consumer class, and what that means vis-a-vis commodity and resource inputs, specifically copper and energy. And that's what I would suggest is the potential there. And I think people are really underestimating what's happening across those. Those are populations that are demographically positive in a large amount of cases. They have interesting policies being put in place that are conducive to economic growth. And they are getting more and more trade between them. So no one's really talking about it still. And I think that's really going to be a catalyst. But again, sell overvalued assets and buy undervalued assets is the point. So here's a note from Jefferies, or a financial firm, on copper. Just read the snippets here because I thought they were interesting. The fundamental outlook for copper is improving faster than we had previously anticipated. Based on our supply and demand forecasts, the copper market is entering an extended period of deficits now. We expect this to lead to declining inventories and higher prices sooner than we had previously anticipated. The supply response to these higher prices will take too long to balance the markets, as the lead time to bring new capacity online is 5 years plus for brownfields and 10 years plus for greenfield projects. Ultimately, we believe the copper price will need to rise enough to incentivize the development of new greenfield projects that the world will need to meet demand, but that incentive price is well above $5 a pound. Yeah, it's probably up around $6 a pound. There's another copper thing. Let me go back here. So, I'm a big bull on emerging markets also. I think, they're undervalued in many cases. They're making a lot of policy changes in specific countries. You can't just buy the EM. I don't suggest just buying the EM ETF, emerging market ETF. I think you need to go country by country and understand what the policies are, what the fundamentals are in those countries. And again, a lot of these countries are cutting rates. And so I hate to say it, but they're in, cycles where liquidity is increasing. So the markets are increasing. Our Brazilian stocks are doing very well. And, I've in my own personal portfolio that's outside of the AIA portfolio, I'm getting more bullish. I have some Mexican stocks. There's opportunity all over the world that's not, and the price you're paying for that opportunity and earnings power is well It's a lot cheaper than what you're paying for in the US in some cases. And so what this is basically telling you is that this is a emerging market composite risk pricing index. And so what you're saying is that emerging market risk is being priced at a very low level. Now that doesn't mean that things can't change. I mean, I think, positives for emerging markets, with this talk about cutting rates, is the dollar topped? Possibly. That's good for emerging markets. Um, you know, um, there's just, I think, a lot of good setup. A lot of the emerging markets have got their inflation under control. They're cutting rates, as I've mentioned for months. That's happening. We're tracking it, and we're seeing those markets and those equities in those markets respond positively. So this can change very rapidly. Emerging markets are very volatile, obviously, for various reasons. There's higher political risk, higher economic risk. But I think if you would look back in time, you will see that typically emerging markets are not correlated with the US market. So if the US market is topping, then or getting close to a top, or is overvalued, shall I say, and these places are undervalued, that's where I want to seek out, places to put money. And so far, so good. So this is some snippets in the Washington Post article. It says U.S. is heading for an electricity shortage. Who had that on the bingo card? I think that electricity consumption over the last, I don't know, 5 to 10 years, something like that, has been going down in the U.S. Why? Because, well, I mean, our use of energy has become more efficient, so we haven't needed to increase our generation capacity. And then we've been going through this transition as we've been removing coal, we've been increasing natural gas plants, and obviously renewables is making a big impact, fairly large impact. But we're not actually increasing the net generation. Now, demand now is set to grow. So let's look at this, some snippets from this article. It says, vast swaths of the United States are at risk of running short of power as electricity-hungry data centers and clean technology factories proliferate around the country, leaving utilities and regulators grasping for credible plans to expand the nation's creaking power grid. In Georgia, demand for industrial power is surging to record highs, with the projection of electricity use for the next decade now 17 times what it was only recently. 17 times. Arizona Public Service, the largest utility in that state, is also struggling to keep up, projecting it will be out of transmission capacity for the end of the decade, absent major upgrades. So just to point out, in Georgia, we pointed out last week an article from the Atlanta Constitution Journal, or Atlanta Journal-Constitution, whatever. I think it's the latter. Anyway, long story short, Southern Company is talking about building more nuclear plants because of this exact issue. And so, that's another reason why you're seeing, I talked about it, was one of, out there talking about it. Amazon siting a data center right next to a nuclear power facility. And, so we're going to have to see more natural gas plants, ultimately more nuclear plants. Obviously, renewables will be in the mix, particularly solar, I think, at this point. So, yeah. And then again, no one's investing in transmission. The problem that we see, even in this business that I'm in, of building these solar farms, is not necessarily the ability to site and build the solar farm. It's how do you get the power out of there? You find yourself being constrained many times by the transmission, with the utilities transmission capability. They can't, it's just not unlimited. And so it's like anything else. If you're trying to add more water to a piping system that can't handle it, it just can't handle it. It's a physics problem. And so who's going to pay for all of this upgrades to the transmission grid? Well, the utilities can do it, but then you have, again, siting problems, permitting problems, lawsuits by NGOs trying to stop them. Not only that, the ratepayer has to pay. Then the Public Utility Commission doesn't want to pass the cost on. And so this stuff just stays in stasis and these problems don't go away. And that's why you're seeing people wanting to site right next to the plant, because there's no, hey, let me just build another substation here. I'll buy the power from you. Boom, I site the thing right there. Okay, then I don't have to worry about transmission. And I think this is another reason why I think SMRs, once they do come into fruition, once the designs are approved and they start building these things, are going to be tremendous, because it'll be almost like a distributed power type situation, but with nuclear power plants. So yeah, I think that if you're bullish on energy like I am, you're going to do very well. So here's the rest of the snippet from the article. It says Northern Virginia needs the equivalent of several large nuclear power plants to serve all the new data centers planned and under construction. Texas, where electricity shortages are already routine on hot days, faces the same dilemma. The soaring demand is touching off a scramble to try to squeeze more juice out of an aging power grid, while pushing commercial customers to go to extraordinary lengths to lock down energy sources, such as building their own power plants. This is a quote here now. Quote, "When you look at the numbers, it is staggering," said Jason Shaw, chairman of the Georgia Public Service Commission, which regulates electricity. Quote, "It makes you scratch your head and wonder how we ended up in this situation. How were the projections that far off? This has created a challenge like we have never seen before," unquote. So there you go, folks. You see the opportunity. If you're going to have AI, if you're going to have a technological society, you have to have energy inputs. You have to have a lot of energy inputs. Okay. And it's not just building more plants, it's transmission and distribution also that has not been invested in and has been ignored. And so this is a tremendous opportunity. I mean, just trying to get like transformers, what's that going to do for copper demand? I mean, every one of these substations, a lot of these switch yards, they all have, there's so much copper in these things. You have, main power transformers, you have capacitor banks, you have all kinds of stuff, right? And not only do you have to build new infrastructure, the infrastructure we have in place is old. Okay. This stuff doesn't last forever. Again, they're machines, they wear out over time, And so I do know that we're seeing lead times of a year or more for a main power transformer. So, I mean, if you're in that business, you're killing it right now. And that transformer, when you open it up, is just bunch of copper windings. And so that's not just happening in the US, that's happening in that global south, that Istanbul to Jakarta, where they're just basically trying to get basic electrical service to everybody. And then they're going to be adding these things. So you can see where this is heading, I think. This is why I think, even Goring and Rosenzweig, they made this discussion out there a long time ago, threw it out there. There's no reason why you couldn't see at some point in the next, during this resource cycle, why isn't out of the realm of possibility to see $10 a pound copper? So you will see demand destruction. A price will get sufficiently high where it will slow this down to a certain extent, but it's going to be interesting to watch. It's a tremendous opportunity in my view. So I wanted to talk about this. We're getting into the political things now. If that offends you, or you don't like my views, or you think I'm a boomer and I should just stay on financial stuff, this is the time for you to go to your fainting couch and disengage, shut this video off. So this is a report, and I'll attach it. I'm just going to say this. I agree with this. There's a report out from the General Accounting Office. That's not a blogger on the internet. That's not an anti-US or anti-military person. That's the US government General Accounting Office has said about 85% of the US fleet of F-35s, the wonder weapons, is incapable of conducting combat missions. Okay. And so you can read it for yourself. It's not good. This is another example. I'm not going to pick on just the F-35, except to say that it's amusing to me seeing all of this stuff stack up. So we have all of these problems. I just talked about the electricity grid, what we have to do to solve these problems for our economy and for our future. And, we have doors flying off Boeing aircraft. We have tires falling off planes when they're taking off. We have reductions in standards in medicine and in law. Evidently in Washington state now, you don't have to actually pass the bar exam anymore to be a lawyer. They're going to come up with all these alternative ways that you can become a lawyer. We're lowering standards everywhere, and everything is upside down here. Okay. And now we have this biggest debacle, $1 trillion program, or plus $1 trillion program. And the US government's own accounting office is saying that, 85% of the planes are incapable of conducting combat missions. And you're going to have a war with China? I mean, do you see? This is the concern that I have. This is the degradation. This is the collapse. This is the slow self-immolation of the West. Okay, we don't have any standards. We've gotten rid of standards because we want equitable outcomes. You cannot have equitable outcomes because everybody's different. What we can have is a system where, we have a system where everybody can achieve their maximum potential based on effort they put in. That is what we originally had. We had standards. If you couldn't cut the mustard as an aerospace engineer, you didn't work at Boeing. We didn't just put you in there because we were trying to hit some DEI goal. And that's not the only reason, okay? That's not the only reason. I'm not just picking on DEI. It's not the only reason. It goes back to what I said last week. It's this degradation in ethics and values and what is deemed important. And it's a complete, it's what you've seen in other, basically, other empires throughout history. It's nothing new. It's nothing unique to the US. And so I keep that. The point is not to just keep pointing this out every week and dunking on the US or dunking on all this stuff and, being a shock jock or whatever. The point is this does have implications for investing. Okay. Because if you're not going to have standards, I mean, I was looking at it. Airbus stock is up 17% this year. They delivered more aircraft. I'm using this as an example than they projected. I think it was 735 aircraft last year, based on the 700 that they projected. They don't have their planes with doors flying off. They're not in the news with safety issues. Okay, and because when you're dealing with these type of things, they have, and the same thing with these military things. The Russians are outproducing the entire Western world in artillery shells. Okay. How is that possible? Well, the defense industry in Russia is state controlled for the purpose of creating weapons that work and in quantities that are sufficient. That's not the case in the West. These are private companies, okay, that have a profit motive. And so when you have profits as your biggest motivation, then the skews the way you should look at things. Yes, they should be government controlled entities. They should be state controlled defense. Okay. That's how it should be, because that's how important it is if you're going to have a defense industry. This doesn't work. I mean, it worked against, Afghani rebels running around in sandals, and you cannot engage with a peer in modern warfare. You see the deficiency. Okay. And so we have all of these things because it's profit based, right? That's part of our lack of values. Defense should, our energy system, for example, is profit based. Okay. We don't have a real energy policy. Every 4 years we have an election. Every 2 years we have representatives getting elected, and we have no long-term policy. Okay. That says, we're going to spend $1 trillion on getting the grid in our infrastructure. If you look at the American Society of Civil Engineers, they grade the U.S. infrastructure every year. It's like D's and C's and F's, guys. Okay. The infrastructure should be upgraded. That's where you should spend your money. You should build, I've talked about this before. If you want to have STEM jobs, if you want to have high paying construction jobs, build 1,000 megawatt power plants over the next 10 years in the United States. Standardize the design. Don't put all these DEI crap on it. We brought that up last week in the, and put all these and hamstring everything in the legislation. Just say, hey, look, we're going to streamline this. We're going to have a symposium. We're going to spend 6 months sitting down with the best nuclear engineers, the best people from industry, construction, operations, and we're going to design and have these submittals and come up with 2 approved designs. Pick one, A or B, that the NRC will rubber stamp because they've been vetted already. And that's what you build. And you guys go out and build them, and then we'll incentivize people to build those. But we won't hamstring you with all of these other issues, okay? And you would see a flourishing. And, then require them to, get the components here over a period of time, and then you will see the emergence of other industries to support that industry. I mean, heavy industry like that. Same thing with the transmission. We've been talking about this for years in this country. The transmission infrastructure needs to be upgraded. It needs to be a business government partnership, because these utilities are not going to do it, because they have to go to the PUC and they have to get approval. It's impossible to get approvals, and the PUC doesn't want to raise rates because the ratepayer doesn't want to pay, and blah, blah, blah. It's all politics, and you just got to have a higher level, like building freeways. It has to be like that. Okay. So we've gotten away from this type of stuff. We've gotten away from meritocracy. We've gotten away, and so everything's about money, money, money. And you see what that's leading to, this love of money, this greed. Everything's about money. And that's why I have such a big problem with pharmaceuticals, medicine, all this stuff. There's no real competition, okay, in medicine. It's a rigged system. What kind of a system is this? Any other business transaction or transaction you make in your life where you walk into the emergency room and you don't have no idea, or you go, let's not even say the emergency room. Let's say you want to go get you go to your general practitioner and he thinks you might have kidney stones. So he sends you for a sonogram, is whatever they use. Okay, procedure. You walk into that office, you don't know what the cost is before you walk in, because you think in your mind insurance is paying for it, but you see how deductibles have went. This is the only thing where you're going to go to McDonald's, or you're going to go to any restaurant. You're going to go to Ruth Chris and order a steak, and you don't know what the price is, and they come to you with a bill at the end, and it's $1,000. I mean, this is how it is. So there's all of these things going on, all these issues that are not conducive to my mind. That, yes, there's opportunity still in the U.S. It's still probably one of the better countries in the world, with all the warts on it, but we're giving it away. We're slowly giving it away. And this is ridiculous. This is supposed to be the next generation fighter aircraft. It's supposed to be the big thing. And 85% of them are incapable of conducting combat missions. This is a problem, guys. It's a problem when we have a company like Boeing, which is a national treasure. There's only two major manufacturers of aircraft in the world, passenger aircraft, large body aircraft, Airbus and Boeing. We can't afford to have Boeing, planes crashing and falling apart. It's not good for the country overall. I'm not suggesting it be nationalized, but it's not a good look. The board needs to get activated over there, and engineers need to be put back in charge, and quality needs to be the main thing. And if people, aren't doing what they're supposed to be doing, they need to be fired. But, we don't think that way anymore, because it's all about profits. Get the stock up. So hopefully things will change, but you need to keep this in mind. I keep it in my mind. It's not actionable on a daily basis, but it's in the back of my mind. And that's why I've been, this allows you to come up with trades or investments that take advantage of this, lack of investment, malinvestment, poor thinking, poor decision making that's being made. So that's, I think, what one of the where this applies in an overall context of your thinking, that what's really happening here, and I think at some point, if we continue to slide like this, I don't want to see, I guess what I don't want to see is, the point I'm trying to make is, I don't want to see us be like, I told you before, one of the things I track is the term uninvestable on Google Trends, and I get emails. And right now, I get all these emails where you have all these media reports about China being uninvestable. I never want to see the US in that role, where eventually down the line, 10, 20 years from now, where the US is uninvestable because it's such a basket case. And I just, I showed you this the debts, the policies we're running. It's just not going in the right direction. And I just have this really sneaking suspicion that we're living off the inertia of our forefathers that tried to do things the right way. And over time, that's going to slow down and then reverse. So anyway, this, I think, is a symptomatic of that. It's kind of a long-winded way of getting to the point. So I wanted to point this out too. I'm not going to sit here and just bag on the Democrats, Republicans also, but remember something. We should love our neighbor as we love ourselves. This is what we're commanded to do, but be aware that your neighbor is not necessarily your friend, doesn't necessarily share your values. And maybe you were one of these people during the pandemic. I don't know. But let's look at this. It's like during the pandemic, that fake pandemic, that made up thing that we had, that panic that we had, mass hysteria. We had that, over 50% of the Democrats wanted to fine the unvaccinated, but, there was a certain percentage, slightly under 20% of Republicans. We go down the list here, lock unvaccinated at home. That was, approaching 60% of Democrats. And then we have, over 20% of Republicans. And, we go down the list here, send unvaccinated to quarantine camps. Over 40% of Democrats, over 20% of Republicans. So we just, take children away from unvaccinated parents. So remember something, that there's going to be more mass hysterias as, the powers that be try to centralize control. They're going to gin up more hysterias and use that for trying to centralize government, centralize control. That's one of the things we have to fight about. But remember something, the guy next door that talking over the fence isn't necessarily shares your values or is necessarily your friend. And when the chips are down, you see what really happens when mass hysterias take place, how people react. These are, fine and imprisoned critics of vaccine, over 40%, but there was still a certain amount of Republicans that felt that way also. So be aware of that. Okay, guys, that's it for this week. Thanks for showing up. Thanks for supporting the channel, and we'll talk to you next week. Thank you.